Hello, my name is David Hershowitz. I am the National Accounting Manager for Trafalgar Property Management. And in this video, I would like to go through a set of annual financial statements and to show you how to interpret the results thereof and what to expect in a general set of annual financial statements. The set of financial statements which I'll take you through is for a body corporate of North Vista. We have been given permission from the trustees of North Vista to use their set of annual financial statements for the financial year ending 28 February 2019 for this video. So this first page is the heading of the financial statement, just a basic common layout of how financial statements actually look. And in this case, you've got the auditor's names in the front. This is not set in standard, but it is always a nice, neat layout of common financial statements. For the actual body of the annual financial statements, it generally starts with the general information of the building, of the body corporate. Now, this is set in for not just body corporates, this could be HOAs, it could even be for companies, where on page 1 is the general information. So your general information would include what the scheme number is, what period the financial statements are for, then where the incorporation of the body corporate is, which country. You'll have the names of trustees. Here we put in the managing agent, your external auditors, this is a requirement, what is the scheme number and tax number, and then who actually prepared the financial statements. So this is the general information that you'd expect. This next page now tells you what actually is inside a set of financial statements. So from this is how we navigate through the next few pages. So firstly, there's always a trustee's responsibility and approval. So it's generally a set trustee's responsibility that's put into every single set of financial statements. We're telling you where the responsibilities lie for the trustees. Trustees then have their own report for a company or an HOA. There might be directors, so there'll be a director's report. On pages 5 to 6, you'll get the internal auditor's report. If it's compiled by someone separate, it is not always mandatory to have a practitioner's compilation report. However, in these set of financial statements, there is one, which is always nice to have. What will happen, as you saw in the first page, in the general information page, is that there will be stated who actually prepared the financial statements. And then from there, the next few pages, from pages 8 downwards, is the actual body of the financial statements. And this incorporates the statement of financial position. This, in old terms, the actual balance sheet. This is the new wording of what it is in terms of international financial reporting statements. Then you have the statement of comprehensive income. This is also known as your income statement, your statement of changes in reserves or equity. There's a cash flow statement, and then accounting policies and supportive notes to the body of the 4 previous reports. And then what's also customary that does get included in a set of financial statements is tax computations, and even sometimes is detailed income statements if the one disclosed in the actual financial statements aren't comprehensive enough. This isn't a requirement for financial statements to show the tax computation, but it is a nice to have. So let's look at it. So this first page, on page 3, is your trustee's responsibilities and approvals, where the trustee acknowledges what their responsibilities are for keeping records, keeping financial statements for the books. They're responsible in a management position for the information that's being now presented in the financial statements, and then it gets signed by 2 trustees. The next is the actual trustees report. This is mandatory for a set of financial statements, and it just discloses certain categories and criteria that have happened during the year. So it gives your main business and operations, going concern, are the events off the balance sheet, and who are the trustees. And some of the information is the same as what's in the general information page on page 2. And then whether the auditors are going to be proposed for the next AGM. It's also usually standard and structured on what information is put on. Going concern, obviously, this relates to solvency of the building. And in this case, there's a bit of a paragraph for it because this is more of an area of concern for this body corporate. Then the next is the auditor's report. Now, the auditors report themselves, this has become bigger over the last few years. At the end of the day, for a set of financial statements, an external audit is performed. What's the purpose of the external audit? This is for the auditors to express an opinion on whether they believe the financial statements, the information that's presented, reflect a fair position of the actual state of financial affairs of the business or body corporate. So ultimately, all the work that external auditors do comes into an opinion that they express. Now, there's a few types of opinions. Generally, if everything's okay, they would express what is called an unqualified opinion. So they're not qualifying the basis of their opinion that the financial statements give a true reflection of the financial position. They can also have something called an emphasis of matter, where the financial information is okay, but they want to emphasize something that's maybe happened. It could be that they're worried about the going concern, that there was additional significant expenditure that happened during the year, something that they just want to bring to the attention of the user, because ultimately the purpose of financial statements is for the users, the people interested in the set of financial results. Auditors have a lot of risk with their opinion, and that's why they do tend to be very thorough, and a good auditor will be very thorough with their testing. So if there is a change in the basis of unqualified, if they're not sure, if there's maybe they didn't have enough information to test and be satisfied that the financial results are in line with their expectations, they'll issue a qualified opinion. And it could be just an except for opinion, that's also known as a qualified, where they accept for one specific item in financial statements, the financial statements look okay. If they are really concerned, they'll give an adverse or negative opinion. And if they don't have enough information to perform their testing, their required testing, they'll give what is called a scope limitation, or they won't be able to give an opinion. So in this case, if you're looking at the financial statements for your body corporate or HOA or whatever business it is that you're interested in, you would look to see what the actual opinion is. So here we'd look at opinion. So in the auditor's opinion, let's say we've audited the financial statements set out on pages 8 to 14, which comprise of the statement of financial position, comprehensive income, equity, statement of cash flows for the year then ended, and notes of financial statement. This is quite set, where they just tell you what their opinion relates to. And the important part here is what you want to look at. If I were to look at a set of financial statements, I want to see just from the auditor's opinion, what is the actual opinion. So what's nice with this set of auditors is they put their opinion first. So in our opinion, the financial statements present fairly in all material respects the financial position of the body corporate. So yeah, they've given a nice unqualified opinion. And what they do after this, they give some sort of basis for opinion. We conduct our audits. Our responsibilities are those audits are described. And they're just saying how they conducted their opinion, how they got to it. So this is all standard. But if you notice, they've got something here called an emphasis of matter. So they've given an unqualified opinion, but if you see an emphasis of matter, it's want to emphasize a certain aspect. Without qualifying, our opinion would draw attention to the fact that no annual contribution to the reserve fund for the maintenance, repair, and replacement of each item was determined. The trustees and owners of the body corporate have accepted responsibility in regards to paying the levy increase as well as the reserve levy for the body corporate. So they're just drawing your attention to some aspect, but they haven't qualified their opinion. And they've also put an additional paragraph here for the emphasis on matter, where they draw your attention to the statement of position, which indicates the body corporate's total liabilities exceed its total assets. So in short, when looking at the auditor's opinion, you want to see what they've done. You want to see what their opinion paragraph is and the emphasis of matter. Everything else is generally more standard. You can go through it. They're also covering themselves and what tests they do, and they're also bound by IRBA, which is International Regulatory Board of Auditors, and the relevant standards in complying with their audit. From here in this section, just got a practitioner's compilation report. We're effectively just telling you that they just been hired, or their service is just based on preparing the financial statements. They're not giving an opinion. So now let's look at the statement of financial position. Let's actually look at the annual financial statements. So here, for a balance sheet, the whole idea is that it balances your assets in the top part equals your equity and liabilities. You can see your total assets equals your total equity and liabilities. It always has to balance. The first thing I'd look at here, so just to show you, it actually just tells you it's set standard in the next few pages what currency it's denominated in, which is rands. There's always a comparative figure. And then there's reference notes. So for an example, you look at cash and cash equivalents. It tells you the balance is 11,334. And to get more detailed, you refer to note 5. Now, to actually see what the financial position is, because that's the purpose of this report, for me, what I would look at is what is my equity position, because this ultimately tells you if you're insolvent or insolvent position. If this is negative, as in this case, it's telling you it's an accumulated deficit. So that's what I'd look at first for my balance sheet. I'd take a look at what is my equity position. That's negative. Okay, so there's a problem. The liabilities actually exceed the assets. And one of the big reasons, in which we can then go and look in more detail, is that trade and other payables is 674,000. So they've got big outstanding creditors. The next report is your income statement. So this tells you the performance for the period. So whereas balance sheet is as at 28 February, so the wording is actually important. Income statement is for the year ended. This is for a period. This is for a year period. So revenue itself, you can see it always starts with revenue. In every single set of financial statements, you can see the revenue is higher than, it's pretty much the same as last year. You've got the comparatives, you've got your other income. What's nice with this one is it's quite a detailed income statement, so you won't have one at the end. But what is also common is you might just have the category revenue, other income, operating expenses. So it's very short and simple, but then you'd have the detail at the end of the financial statements. And as again, with the balance sheet, you can see that there's notes in reference. So here, once you look at this, where it's common to look at is what is the bottom line. So your deficit for the year, this is a negative, so it's a deficit. If it was positive, it'll be a surplus. And here, it's saying your total comprehensive deficit for the year. And in this case, there's no other comprehensive income. The next document or report is your statement of changes in reserves. This is your equity. So we saw on the balance sheet here that you got an amount of 981,915. This is your equity. But now we actually got a report that explains this further. So the statement of changes in reserves, this talks to the information and figures that relates more to your, in the case of a company, your shareholders, your equity participants, and here it'll be pretty much your members of your body corporate. So in this case, there's accumulated deficit, and this is just telling you what's happened. What is also common when there is a maintenance reserve and an admin fund, that you actually have two different columns that shows you what the maintenance reserve is and what the admin fund is. And this end column is your total. So here, if we were to interpret it, you'll see a balance at the beginning of March is this. There was a deficit for the year, and these numbers you can actually tie in from the income statement. And this will all balance back to the balance sheet. It's just another report that gives you further information on equity. Following on is your cash flow statement, or a statement of cash flows as it's referred. And this actually tells you what happened to the cash in the business. And the cash flow statement, it categorizes cash in three main areas. There's cash from operating activities, cash from financing activities, and although there's not in this case, in this annual financial statements, also cash from investing activities. Yeah, it's telling you what's happened. Now, cash generated from operations is going to tell you how it comes up in note 9 to this negative 2,590. Remember, accounting itself is, in terms of IFRS, is done according to accrual, so it's not necessarily cash-based. So you can raise an invoice, you'll bill at the end of the month, but you won't have received the cash in yet. Okay, following from the cash flow statement is your accounting policies and notes. And what this does is this gives you more information. So your accounting policies, those are going to tell you what is the basis of the accounting used for the financial statements. So here in this paragraph, it's always going to tell you this is in terms of international financial reporting standards for small and medium-sized entities. And important is if it tells you it's done on a going concern basis. What that means is they expect the body corporate in this case to continue as a going concern, to continue being in existence for the next 12 months. The next set is your accounting policies, just goes through certain items and explains how that it was accounted for. Following on this is your actual additional notes. So if you remember from your income statement and your balance sheet, we had referenced an item. So let's go back to income statement, for instance. Let's go back to income statement. We can see here note 2, municipal expenses, 4,551,708. This just gives you the more detail on it. So it's there to help you interpret and understand the financial statement. You can see 451,708, and this is the detail behind it. And this is the same for each area. Remember, we identified trading other payables was a key issue in the balance sheet, and here it's telling you it's because of your municipal. And that's just the idea behind the notes. And then, if you remember in the cash flows, it breaks down the cash generated from operations. What it does, it takes your accounting profit, or let's call it in terms of surplus and deficit before tax, and gets rid of non-cash items to come up with a cash amount. And then including this set of financial statements is your tax computation. As I said, this is not mandatory for a set of financial statements to be included, but it is a nice to have. And as you can see, it's been put in here that this effectively is unaudited part, which they don't put an opinion on. Auditors are just covering themselves, but please just understand that they do actually audit the tax. That tax amount they have to be okay with when they do give their opinion. So hopefully this video has helped you understand and interpret financial statements a bit better, and from here to identify which are the key aspects to look out for. Thank you.